running a business, there's a three-letter word that probably most people maybe because it's scary or there are lots of myths around it. But that word is tax. When you're running a business, how do you include taxes in running that business? Do you get help from a professional or you just run a business as usual? And when you have challenges, you find your way around it. Welcome to Blair Connect. I am Kwabena Nyamiche, and today we'll be talking about navigating tax and compliance. And I have today with me a tax guru, and he's a Bloby. Bloby Godwin Dick. Godwin, you're welcome.
Thank you so
I'm sure
much.
when I say tax guru, you're like this guy.
Oh, well. That goes to say. So I can't remember. I was at the hospital sometime and the physician asked me, okay, that what do you do? I told him I'm a tax consultant. And he
Right.
was like, so you are part of those people who just take taxes and give to the government. He said it
No.
on the kind of like a bad note. I was like, well, oh, actually, I'm a white angel. That's how I have to think of myself, in the sense that I rather help you
Yeah.
position yourself well in order to ensure the right taxes are paid to
Right.
prevent any kind of like
Problems with the
overpaying.
government and all
Exactly,
that. Yeah.
exactly.
Yeah.
So yes, that is what I do. I'm a
Super.
tax consultant,
Super.
and I'm here to help and share my ideas of tax and also educate the fraternity today.
But the interesting thing, right? When we said we were going to talk about taxes, we had a lot of buzz, like a lot of people contacting us. Like people were really excited about us talking about taxes. And I think that it stands to reason because for me, when I started running a business, like taxes really scared me. I don't know because of the myths around it. When you
Yeah,
ask
it
people
makes
about
sense.
taxes, like sometimes it's
Yeah,
so
yeah,
all over the place,
yeah,
and it's like you never get to understand it. But
yeah.
after dealing with consultants and getting help, it really makes sense. Like it's not as scary as we make it seem. But what has been your experience around taxes over the years? You have how
Okay.
many years experience in taxes?
Oh, 5 years experience.
5 years
Yeah,
experience.
I'm still in the
I think
game.
before you tell us a bit about taxes, tell us a bit about yourself.
Okay, so I've been a tax consultant for about 5 years now. I'm an assistant manager for the firm that I work with, one of the big four. And the journey through tax, tax is all about law. That's the first thing that we ought to know, okay? Before we can take your income, there must be a legal position to it because other than that, then why will we pay taxes in the first place? And there's this saying that I can't really remember who said it, but it says that there are two things that are more certain in this world: death and taxes. Meaning that no matter what you do,
That's interesting.
yeah, you pay the tax, yes.
Yeah.
So, like I said, I'm here to guide, share ideas, and also allay some concerns
Yeah.
about, yes, taxes.
Okay, so now let's go into the meat of the matter.
Okay.
Now, with your experience, right, what are the common tax compliance issues that, let's begin with individuals before we go to business, because individuals too have taxes that they have to pay. So,
Yeah.
what are the common mistakes that or the steps that we sidestep when it comes to taxes, individuals?
Okay. Before I delve there, let me just create this whole general overview
Okay.
of imposition of tax, why taxes in the first place. Okay, as there is. So, in the grand scheme of things, like I said, tax is law. Before we take a portion of your income for government to do their developmental projects and what have you, they must have that law back in whatever amount they want to take as taxes. Okay.
Okay.
So in the grand scheme of things, all taxes can be categorized into two, either as direct or indirect taxes. Okay. And with the direct taxes, I want you to think of it this way. The mandate is on the person who earns the income. You pay it directly. So in the nutshell, we have the normal PAYE, where the earner, that's employee income tax. You get it. Where the individual who earns the income pays the taxes. Corporate income taxes, where the company pays the taxes. So they are more direct form. And on the flip side, we have the indirect kind of taxes. And with the indirect taxes, we are looking at what the law is simply trying to tell you is that it's borne by the final consumer. Okay, meaning it will be moving from one person to another until the final person who consumes that item will pay the tax. So a typical example in this case is the value added tax. We have the excise tax, and it goes on. So now to move into the space of the compliance bits that you are, yeah, individuals. Still, just to throw it out there. For an individual, let me start using some legal, explain some concept. So we call something a person. In law, when we say a person is either an individual or an entity. Okay. So for an individual to be compliant, I say there are four golden points that we
Four golden points.
golden points
Okay.
before we start getting into the technicalities.
Right.
There are four things that we shouldn't get out of hand for both individuals and entities. Mind you, I mentioned a person for tax. We always say an individual and an entity is what we call a person. So when you hear a tax person say a person, then we are referring to both an individual and an entity. So in this case, for a person to be compliant, the obligation, there are four golden things. The reason why I'm saying golden, you realize that doesn't make any sense, but they are the very root of it. So the first thing we'll say is that you should keep good records. You should have good records. Very basic. Why am I saying that? Because, for instance, when the tax man comes, you get it, and you want to prove a point, you need your facts. You need to show the receipt. You need to show that invoice. You need to show that, oh, I did this, and your documentation is intact to prove your course. Okay, so that's the first thing that we have to do to be compliant. Another thing that we'll also look at is the filing. There are deadlines and things that we look at that the law stipulates that if you don't meet this deadline, then these are penalties. Okay, so in the grand scheme for an individual, let me just say for an individual, we have some obligation for an individual to file his personal income tax return at the end of each year. Okay, the law gives you 4 months to file that return. And if you don't file that return, now there's a penalty of 500 cedis plus 10 Ghana cedi every day.
Okay.
You get it? So now, in order to avert this, you just have to file that return and you go your way, and all these penalties are averted. Mind you, right now that we are in 2025, if you owe returns that go back as 2022, you can just hazard a guess as to the number of 500 Ghana cedi plus 10 Ghana cedi you'll be paying. It runs a lot into the thousands. So yes, like I said, the first thing, maintain your record. Remember, I told you 4 cardinal points. The first thing, records, documentation. Second thing, file. Now the third thing, just pay the taxes. The tax liability that you've calculated, pay it in simple terms. Because there's also a penalty that goes. And the interest on it is 125% compounded monthly. If you don't pay that tax that you yourself, you have positioned yourself to assess. Now, Ghana runs a scheme, not Ghana, we run 2 schemes. We call it a self-assessment, an assessment where the Commissioner General himself imposes an assessment on you, which people will know to be a preliminary assessment. So in the self-assessment, it's like a voluntary form. You have to assess yourself and say that this is the amount of taxes that I will pay or I have to pay the income that I purport to receive. You get what I mean? So when you make that self-assessment, then you now comply. So it now becomes a voluntary kind of stance.
Not to cut you
All
short,
right.
right? So before I started filing taxes, so I started filing taxes when I had a business. I registered a business, and I decided that I have to be compliant. So I went to GRA, did all those things. They asked me to go to the portal with my Ghana card.
Mm-hmm.
I did all that, and that's when I knew that I had to be filing personal income taxes.
Okay.
For the usual person walking down the street who works in a firm who doesn't own any business, do they need, like, when I wasn't running a firm, I didn't know anything about
Personal income taxes.
So is that a problem?
Yes, yes, and I feel now the posture of the Ghana Revenue Authority is to, let me say, educate the general public. I must commend them. They are doing so well now, at least. If you look at the website, there's all this propagation of information just for us to know what is going on.
Right.
And mind you, the budget that was read by Ato this last quarter, Ato Forson this last, he's forcing, you can say that. The budget that was read, he also purported that another thing they really want to do is to create that tax awareness. Even though I know it's been there in previous policies, they are just hashing it more for us to know. And now the way the whole tax system is going now, and I just want you to know, with this whole Ghana card and things, we are now pulling a lot of people under the tax radar. Okay, we are now pulling a lot of people under the tax radar. So something may come. You may need what we call a tax clearance certificate. In the laws, it's a lot if you want to own a land, even if you want to drive. But just that they are not so strict on it. Some bank transactions, you will need a tax clearance. And if the only way you can get a tax clearance, now let me just simply explain what a tax clearance is the only official documentation that the GRA will give you to say, oh, Dapa is paying all his taxes, he's in my good books. And therefore, Dapa can proceed to do whatever he's going to do. You get it? So that's simply a tax clearance. They are clearing DAPA for DAPA to do whatever transaction he wants to do because DAPA has satisfied all his taxes and it's in my good books.
So I have a question.
All right.
Now, for the years that I didn't file my PIT, does the penalties you spoke about apply?
Yes. And no.
I like the no. Say the no part.
Let's start with the yes. So let me just say that the best time to file your taxes, okay, all right, was when you got that, when the mandate, maybe you had a taxable income for which you had to pay taxes arose. That was the best time that you had to pay the tax. But now when we talk about the next best time, is now, okay, for you to actually file and pay the taxes. So maybe 3 years ago you didn't file, all right? And I just want the viewers to take note of this. 3 years ago you didn't file. Yes, you are in kind of like the bad books. But maybe today that obligation arose in 2025, we have an obligation for 2024. For an individual, we use the January to December year end, okay? Businesses, we say we use the accounting year end or their financial year end. It's the same thing. But a business year end may be different, maybe from May to June the next year, so it will straddle. But putting it into perspective, in answering your question, if now you start filing your taxes and you are ensuring that all your records are kept clean, then now the next year goes, all your records are kept clean. It will come a time in that 3 years that you have good records and now the GRA can stand on that. So it's more of like, how should I say, it's prospective. Unless maybe you need a tax clearance certificate now, then now we have to go back, it's mandated. We have to go back and see your last 3 years. You get it? And now you have to now regularize. What I simply mean by that is now do all those corrections, file all those returns that you had to file, and unfortunately pay the penalties.
So it means if you have 3 years locked up, you are okay.
You are okay.
You don't have 3 years locked up, and within that period, you have to, you need a clearance.
Yes,
then
you would have to go back. Unless, of course, there was no real activity. Because why would we tax you? We tax you on what you earn.
Yeah.
So if there has not been any activity, then it's nil.
Yeah.
But unfortunately, they may penalize you for not filing.
Even the nil.
Even the nil.
Understood.
You get it. But well, let me just say, our tax people are humans like us. You get it. It's not elaborative. There are more conversations that you can have with them. You get it. And a lot of these things will be put in clear day for us to solve.
Okay. So viewers, this goes to all of us. If you have not been filing your taxes,
yeah.
So give us the process to file the taxes.
Oh, it's now very, very simple. All you have to do is get your Ghana card. Now, your Ghana card, or for expatriates, what we call the non-citizen ID, It's now your tax identification number. As soon as you have it, you are under the tax radar. So you just go to the GRA portal, okay? You log in your Ghana card details, all right? If it's your first time registering, it will prompt you that you probably have to sign up. In signing up, you have to generate a code, which will be the number that you registered with when you were procuring your Ghana card, meaning when you were registering for your Ghana card. That number, they'll simply send a one-time short code to it. You put in, and voila, you're already in the system. It's as simple as that. Then it now gets more detailed. If there are returns like the personal income tax return that you have to file, you just request for it on the portal. It populates a template for you, for which you now have to populate. A pop-up template comes for which you now have to populate. And if you have all the information, you put it inside, but you can't compute the taxes. GRA will compute the taxes for you because they know that if they leave that tax portion for you, heaven knows what you'll be doing over there, right? Exactly. Yeah. So they'll assess the taxes and they'll put it on it for you. So it's as simple as that.
Okay.
Yeah.
Okay. So on Block Connect, one of the things that we say is that we want to have conversations that puts money in the pockets of Akakaho students.
Fantastic initiative.
So these conversations are definitely conversations that are going to help you put some money. At least your taxes will not, what you are giving you will not suffer the penalties and take money from your pocket.
Yeah.
But today, you see, a lot of people have maybe do freelance jobs, things that give them passive income. So for a freelancer or somebody who is doing some remote job, right? How can they stay compliant with tax obligations?
That's a very good question. And driven by the norm of the day, I can see a lot of people want to do their own jobs. All right. And the posture of freelance, I just want us to understand, is simply a sole proprietor. Okay. An individual doing his own business, an enterprise, self-employed in simple terms. Now, you remember I was talking about the cardinals and golden rules for compliance. I spoke
Because
about
I think I catch you had paid the tax.
exactly the third and fourth didn't really come. So the third, the third was pay the tax. The other one was file the return.
The return, that is the second one.
Good. And I think the first one I made mention, keep records. Now the very golden one, the barest minimum, is to register with the GRA. Set up that business that you've registered with the RG. The GRA must know about it. Register. Okay? Because in the first place, if you don't register and now you come, the GRA will now raise that registration document, compare with the time that you are coming. So that means that all those times that they had not seen you, they will now charge you for it. There'll be penal charges on that, if you get what I mean. So now back into the freelance. Yes, we understand you are doing your business, you are doing everything, but there's a certain look of fuel that government is also after. Because if you make income, there are taxes imposed on that income that you make. So in the first place, as soon as you do your registration as a freelance, please register same with the GRA. Let them know about you. And I know I saw some of the hype, and a lot of people were asking questions even before I got here, asking questions in the same of incentives. Before you can get all these incentives, you have to be registered with the GRA. There are some that you'll be exempted for 5 years. There are some that you pay very reduced taxes as far as 10 years. And after the 10 years, they now push you to another tax scale. You get what I mean? So for a freelance, please register. You get it? Keep proper records. When you make all those transactions abroad or even internally for a consultancy for which you've provided your services to, you have to be paying what we call withholding. You'll be paying some taxes at the end of the year as well. All those things, if you're not registered, and especially the withholding, we call something withholding credit certificates. When you transact with someone who charges you tax, they'll take a portion of that amount. You get what I mean? And ideally, those amounts that they are taking from you is for you to help defray your taxes. So if you've not registered, all these things will not now come and reflect as credit position for you. And at the end of the day, when you come under the radar and they charge you all these things will not provide the cushion needed to help you pay the less taxes that you ought to pay. So like I was saying, compliance for freelance, please register, file the returns, pay the taxes, and keep proper documentation.
So file, keep proper documentation. Okay. So that's what freelance is.
Yeah.
But are there any special obligations that are to them aside? So you spoke of withholding. So aside the withholding, that is definitely credit to them.
Yeah.
So the withholding is the person who you are offering the service to, they withhold, and then they pay to your
the tax.
to your tax.
Yeah.
So it's a credit for you.
Yes, it's a credit. They pay to the GRA.
GRA, okay, and it's credited.
Yeah,
to
so it's an advance payment made to the GRA on your behalf.
Okay. So are there any taxes that freelancers like fundamentally or across board have to pay? Is there anything like that?
Oh yeah. So if you're a freelancer and maybe your business is booming, okay, you may have to, on the side of indirect taxes, you may have to register for VAT. But VAT has a requirement of 200,000 Ghana cedi, meaning your turnover, your revenue, your sales that you are making. If it exceeds 200,000 within a year, okay, or in a quarter, you make 50,000. You see how we split it?
Yeah.
And we can say that we will make that 200,000. You have to register for VAT. Okay. So now that obligation for value-added tax will now fall on you. Okay. But fundamentally, and I want you to get this, maybe you may not have triggered the VAT obligation because VAT you have to trigger, it's a requirement. Okay. Maybe you may not have triggered that. But on that little income that you have earned, there's a portion that must go to government. Do you understand? So that's what we call the PIT. Okay. All right? PIT, personal income tax.
Okay, PIT.
Yes. You see, on the corporate side, we call it corporate income tax, CIT.
Right.
Okay. Right. I'll explain every jargon I use because I know my audience. I'm in my field, right? Good. Yeah. So on the individual, because you are the sole proprietor, you pay personal income tax on whatever income from business that you have earned. Okay. Ideally, this should be paid at the end of the year. But what the law does is spread it across on a quarterly basis for you. So there are 4 quarterly installments that you'll be paying this. Okay. So a freelancer, when you do your NOCO fuel and you get the portion, ideally, there's a portion that will go on a quarterly basis to the GRA. And at the end of the year, you regularize to ensure that your annual income tallies with those quarterly payments that you are making.
So we'll take some questions from our online audience as well.
Okay.
So we've had a couple come ahead of time.
Oh, nice.
We've had some to coming on as we're having the conversation.
I like that.
Yeah. So if you definitely have a question, please do well to drop your questions in the comment section, and Godwin is here to take them. Godwin.
Yeah.
Let me take the first question.
Sure.
So someone said I have slowed down a bit on business, but I want to still pay my tax. How do I go about it?
When he means slow down, is it that money is not coming, business is not booming? Exactly. Oh, okay. I understand you. Well, times were hard, times are still hard, and it's not easy to run a business. But let me say that the drafters of the law are humans as well. And the law, the income tax as we have it, is also very generous, okay? And the revenue administration that governs it. So yes, you have slowed down business. You want to regularize with the tax authorities. The first question is, do they even know you in the first place? You know, there are certain provisions of the Act that provide you mandate to simply pen down to your tax office to let them know that, oh, my business has gone dormant for a bit. I'm not making this revenue, so I'll not be able to file these returns for this period of time. So if you can hold on to it, so that the obligation for filing wouldn't automatically be churning out. Do you get it? Because VAT, if you are registered for VAT, every month you have to file your VAT. If you are registered and you have employees, every month you have to what? File your PAYE.
Yeah.
You get it? Failure of which you'll be surcharged with all these penalties. So if your business is go dormant, inform your tax authorities. All right. And on the side of maybe you are facing cash flow issues and all, okay, so you can't pay GRA. Like I said, there are provisions of the law that lets you see how generous our Commissioner General is. Okay, so you can simply tell him that, oh, I'm XYZ company, him or her. Right now, we all know we have a him. So the Commissioner General, yes, I believe you know him. What's his name? Sapon.
Okay.
Yeah. So Kwesi Sapon, right? So you can simply tell him that I'm XYZ. Okay, I run this company, but I have a tax liability of this, but I'm not having enough cash flow to pay due to these reasons. So you take the initiative to tell him when you would pay first. You get it? And now he will now come back to you and tell you that, okay, I confirm or I approve, or let's have this structure, okay, payment terms for you to pay me these taxes. And mind you, when you do all these things, you take away or you allay all those concern of penalties that will be accruing. I've seen cases where that the interest, okay, on the liability is more than the liability itself. You get it? So when you now take this initiative, you avert all the issues of what? Penal charges of interest that will be put on you.
So essentially, what you're saying is that when you are having challenges with your business that's going to affect your tax obligations, go to the tax office.
Yes.
Tell them of your challenges, and they'll give you help.
They'll give you help.
Okay. So here's the next question. Is there a way to delay payment of tax for a few years for the business to grow before regularizing it?
Yes. So, like I mentioned, you can simply write to the Commissioner General and he'll give you a payment term of when you actually have to pay the taxes if you can't fund it. But just to let you know, you remember I was talking about generosity of the law?
I think before you go into generosity, so this is somebody who is probably yet to take off the business. Okay. So he wants to find out whether the business is a market fit. So maybe he will need to put in some taxes somewhere to get the business from other people. But he has not really
gotten, he's not really operating
it. All right. So what can he do in order to be compliant?
Yes. So like I'll shout again on the generosity of the law. It provides a lot of concessions based on your type of business and all. You get it? So for instance, if you're into agro processing, the law gives you about 5 years, okay, for which you'll be paying taxes for as low as 5% before you will hit in the groove. And the understanding is simple. With agro processing, like for instance, pineapple, okay, I'm into a pineapple business. Why? Maybe turn them into this fruit juice. I need to plant the pineapple, nurture it for it to grow. You get it? Eventually harvest it and now manufacture the juice that I want. There's a whole lot of things that could happen because I'm now starting. Do you get it? So the law can see that, okay, because you're now starting, let me now save you a lot of these tax issues because I also want you to make it as a business. So pay taxes for as low as 5% for your first 5 years. And these industries are, there are lots. We can talk about waste management, simply waste. You'll be going out taking waste. The law gives you 7 years. 7 years of paying taxes for 5%. If you're a young entrepreneur, the law gives you also 5 years. And that one, you don't even pay taxes. It's exempt altogether. Followed by which now, they now change your tax band to another reduced rate. So I'm simply trying to say that if you are starting, you are registering, you simply have to register with the GRA for them to know because you can never enjoy this. And on the backdrop of that, maybe I'm still doing the business. okay, and maybe in year 5 or year 6, now things have turned quite dark, and I'm not making profit, and I've lost my concessions. The law now provides what we call a carry forward of losses for you for 5 years. So if I make a loss now, I
Right.
can carry it for a period of 5 years. Do you get it? And the law only tax you when you make a profit.
Mm.
You get what I
So for
mean?
5 years, if you are so year one you made a loss, you can push year two loss,
Yeah,
year three loss,
yeah.
year four loss, year five loss.
Hmm.
If you are making loss after 5 years, then it means
So you now you understand it doesn't make business
it
sense.
doesn't make business sense.
Exactly.
All right, cool, cool, cool. So I have some more questions from other blog B here. So
Let's.
it says that if an organization engages the services of interns,
Mm.
what tax is applicable, if any, to the remuneration paid to the interns, and what section of the law addresses this?
That's a very specific information that he
I know,
wants.
right?
Okay, so this one turns our mind to employment income taxation, okay? So let me start by saying that for interns, people have a little bit of sentiment around it, saying that, oh, he's an intern, maybe
Probably
he
to
just
add value or
started, yeah,
something.
so why
Yeah.
do we tax him? But the law is quite clear. It will tell you for employment, all gains and profits that an individual makes is taxable. So if you're an individual, we can purposely say that because of the capacity that you are in as an employee, an intern is also in employment in a way.
Yes.
Do you get it?
Yes.
You are receiving this amount of income. You have to tax it unless I'm telling you to exempt it. So in tax, we'll say unless explicitly exempt,
Okay.
then we don't. Unfortunately, for this person asking the question, internship allowance, okay, or salary you pay an intern is not part of the exclusions or exemptions. So that
So it's
is
taxable.
taxed, yes. But let me now give you a little bit of comfort, okay? So maybe I have an intern, all right? I don't pay him salary, okay? But just because of what he does, I reimburse him for costs that ideally the company should bear, maybe transportation and things like that, okay? I can say that, oh, it's a reimbursement,
Mm.
okay? So it's not like I'm paying him, but I'm
Right.
reimbursing.
Okay.
All right.
Okay.
Then on that regard, in that note, then we will say that okay, that satisfies an exclusion. So on the blanket of things, I want you to know all interns,
Yeah.
even when he's in the university and you pull him out, do you get it? That amount that you pay, you will not say because he is not done with uni and he's just doing internship or attachment as some may call it, then it has to be exempt. There's no provision that exempts that.
So maybe
Okay?
paying payee for him.
You'll be paying
Or
payee for
him.
him.
Okay.
All right.
Okay. Now that you have said that the reimbursement, if I'll give you salary and say it's a reimbursement.
No.
How
So
does that work?
so the law, I like that. And just to get a little bit technical,
Yeah.
the law tells us that it has to be an expense that employer should ordinarily incur for the
Right.
business.
Right.
If I give you salary, no, I'm paying you.
Mm-hmm.
Do you get it?
Mm-hmm.
But if maybe I sent you to do something, do you get it? And now I'm reimbursing you for that cost that the business should have borne,
Okay.
then that's a reimbursement. So
Okay.
we usually use this term for the proper business purpose of the employer.
Right.
Do you get it? That the employer should ideally, ordinarily, should incur and
Right.
not you. Do you
Understood.
get it? Not for your personal gain, I should put it.
Okay.
Yeah.
Understood. So the one who asked in this question, I
Yeah.
hope you've got your answers.
All right.
Okay. So another one. The
Let's have
person
it.
starts with, "I'm curious. I'm curious about the below." There's
Okay.
like three. It's packed. How many? Three of them. Three questions in one. If I'm paid by a foreign parent company,
Okay.
but physically working in Ghana,
Mm.
who is responsible for tax compliance, me or the foreign entity?
That's a very, very good and technical question. Okay. Before I delve into that, let me just take this opportunity to explain some key tax concepts. All
Right.
right. Yeah. At the very beginning, when I was talking, I said before we tax you, okay, it's law, right? But also an essential point is there must be a connection, what a taxman will call nexus.
Okay.
There must be a link. between why I should tax you and why I cannot tax you. In Ghana, it's two, and generally all over the world is two, depending, right? But for Ghana, we call something a residency principle and a source principle. So when we say you are resident, and mind you, I'm not talking about immigration residency here, okay? So when we say you are resident, immigration will say residence in terms of where you reside, but tax will tell you resident. And what a tax man means is that we claim you as our own, and for that matter, we can tax all your income on a worldwide scale. Do you get it?
Okay.
But when we say source, then we are saying that where did you perform that activity? Do you get it? Where did you source that income from? Where did you derive it? Which states? What did you do? Okay. Before we can tax you. Okay. For an individual to be resident, I don't want to run you through a lot, but for an individual to be resident, and if that individual is a citizen, we say automatically that individual is resident for tax purposes. So if you're a citizen, you are resident. So that means, good. So that means as a nexus, Ghana can tax you. There are a lot of conditions, but let's take this in general. Okay. And for employment, for you to source employment, the law will tell you that you should be physically in this country working to generate that remuneration. Do you understand? Then for that matter, we look at your work duties and we say that you are sourcing the employment. So maybe you may not be resident. Maybe you're a foreigner, you have not triggered residency here in Ghana, but you are here working. Ghana has the right to tax you because you are performing your duties. You are sourcing that income. Do you get it? When you are a resident, we tax you on a worldwide scale, meaning all your foreign source income, Ghana will consider it for tax purposes. But when you are non-resident, we now look at where you source that income. Are you deriving it from Ghana? Now, talking about all these concepts that are spoken, putting it into perspective, okay, of you working for a foreign employer while you are here in Ghana. Now I throw it back at you. You're a Ghanaian here in Ghana. Do we have a connection to tax you?
Yeah, you're in Ghana, so there's a source.
You're in Ghana, so you are resident, and you are working here in Ghana. You are exercising employment here in Ghana. So you are sources. So Ghana must tax you. So to answer that question, yes, you have to pay taxes. So that's out of the way. So we are saying that we have a foreign employer. Is the obligation on the foreign employer to pay the tax, or it's on me? Ordinarily, okay, and I didn't want to be using a lot of legalese, but it looks like my my viewers and questionnaires are, yeah, they are coming from very strategic positions. Let me put it that way. So let me just say, okay, that ideally, a resident employer is the one who has an obligation, okay, to pay those taxes on behalf. Do you get it? For PAYE purposes. Do you get it? And when we talk about a resident employer, not to sound technical, it simply means an employer who is established here in Ghana. I don't want to bring things about permanent establishment, so let's think about it. An employer who is established, so the company must be in Ghana. For them to now fulfill that obligation of paying the PAYE on your behalf, because the law puts that mandation on them. Do you get what I mean? Whilst they are in Ghana. Now, on this flip side, you have a foreign employer. You actually have to pay taxes because, one, not only are you resident, you are exercising the employment in Ghana. So you actually have to pay the taxes. But just that you are being paid by a foreign employer. So now the obligation will flip. You, the individual, you now have to pay that taxes. Do you get it? Because we cannot go and chase a foreign company in a foreign man's land to come and pay the taxes on your behalf. Do you get it? We don't have a nexus on them. We don't have a connection on them to tax, but we have the connection on you, the individual, to tax. I know it was a bit lengthy, but the question was a bit technical for me, so I had to.
So I hope you've got your answers. I hope you've got your answers.
Right.
Okay. So the next one says that, but even with the connection, the residency, the source, and all of that, so it means that if the person is working in Ghana, there's that source here.
Yeah, yes.
And the person is a Ghanaian, so resident applies.
Yeah.
let's say the person travels outside Ghana
Mm-hmm.
under the ticket of the company. So it means the person is working in another country. So there's source, but there's no residency.
Good. Okay. So, because of the questions you are asking, let me
Yeah.
expatiate on the residency.
Right.
Okay, for an individual. Mind you, I said when in tax we say persons. Okay, we mean what? An individual
and an
entity. I like the way we are doing. Yeah, maybe before you leave here, you may. That's fantastic. Okay, so for an individual to be resident, the first caveat is he must be a citizen.
Mhm.
And the law will now tell you, other than a citizen who has lived outside the country for 365 continuous days.
Mhm.
So if you're a citizen, but you are out of Ghana for the entire year, you will no longer be resident. We will say you have broken residency.
Mm.
Do you get it? For an expatriate, we simply have a rule. We call it the 183-day rule. Do you get it? For an expat, because we know he's also coming from somewhere. What if on the flip side, their tax laws are simply like ours?
Yeah.
Do you get it? That means he'll always be resident in his country unless he's not in the country for the entire year, 365 continuous days. So that means we don't want you to even be in the country if you're a citizen before you to not be considered resident.
Okay.
Do you get it?
Okay.
So if you're an expat, we use the 183 day. That means we want you to be in Ghana for 183 days in aggregate. Because you say, oh, let me come and go, let me come and go.
Okay.
The law, the crafters of the law are quite smart.
Yeah.
Do you get it? And not to sound technical, they have a range. Do you get it? That will straddle for them to determine the 183 day. But because there's no question, I just want to use this to explain to you, but I'll not go deep into that.
Okay.
Do you get it? So for a citizen, you are always resident until you are out of the country for the whole year, simply put.
Right.
For an expat, you see how I've done it? For an expat, you need 183 days in aggregate, not continuous. Okay, so now you, Dapa, a citizen, you've moved outside Ghana, okay, to work in a foreign country. So let's say you only went there for 6 months and you came back. Dapa, you have not broken residency in Ghana because you were not out. Thank you. But you, Dapa, introspection, you're an expat, a foreigner. You move out of Ghana and you spend 6 months. Do you get it? Let me know here because maybe 6 months, you may still get 1 year, right? So let's say you spent 8 months. When you spend 8 months, you will break residency here in Ghana because you need 183 days in aggregate within a 12-month period. Okay, so when you move out, do you get it? And go and spend those long duration of days above 6 months, you will inadvertently not get 6 months here to get a 183 days. So for that, Dapa now would have broken what? Residency. Do you get it? So for employment, we don't have a nexus to tax you. But if Dapa hasn't broken residency, we have a nexus. We still have a connection to tax you. Unless, like I told you, if you're a non-resident, then you should be sourcing the employment from Ghana. Do you get it? That is when we can tax you. So if Dapa has broken residency and Dapa is working outside Ghana, Dapa is not sourcing employment from Ghana. So Dapa cannot be taxed on that employment income.
Understood.
Okay.
Understood. Whoa.
I hope.
I went in class. Okay. So the next question. Can
Okay.
employees report non-compliant companies anonymously to GRA?
Blowing the whistle. GRA will pay you. Trust me.
Oh.
When you whistle blow, they will tip you and tip you big, especially when they go in there and they're able to uncraft a lot of things. Oh, yeah.
So there's
There are hotlines out
whistleblower
there. Yeah,
protection.
yeah.
Okay.
You have it.
So the person asking, can you use that as your passive income?
Yeah.
Reporting
Yeah.
companies. Anyway, so another one. If my employer is not deducting income tax from my salary, am I personally responsible for paying it to GRA?
Okay, so from the legal point,
Yeah.
the obligation is on your employer. You are not personally, and this one I'll be as direct as I can. because I can see a lot of employees may be suffering these same fate. Okay, you are not obligated to pay that. Okay, the law puts that obligation on your employer, failure for which a lot of penalties apply on your employer. Okay, so GRA ideally should come chasing your employer for it. Okay, just to say, but you are not obligated to pay. So when they come chasing you, please direct them to your employer. Okay.
Alrighty. So I'll just take some two other questions, and I think we'll call it a wrap for today's conversation. I've really enjoyed this conversation.
I'm glad. I'm glad.
I'm learning a lot.
I'm
really
glad.
learning a lot.
I'm glad.
Nexus, residency, SASSIN, the four golden rules of taxation and all that. It's good. Okay. So this question says that how can a small business reduce tax liability while remaining compliant?
Okay. Small business reducing tax liability while remaining compliant.
You know the funny thing, when people don't want to pay taxes, they call themselves
small business. And it's a really catchy phrase they put on themselves. Okay. So in Ghana, all right, if you want to really plan around taxes, okay, the law provides ways you can plan around taxes. I spoke about concessions for you to know. If you don't know about this, you may be losing out. All right. So there's a whole list of the concessions: agro processing, waste management, what we call real estate. All right. Affordable homes, like we call it. Yeah. If you want to open a rural bank, all these things have a lot of concessions that provide very reduced rate. Even certain business up in the free zones. But let me focus on small business because they are small, right? They are trying to say they are turnover. So first of all, you always have to do the needful in registering with the tax authorities. After you are done registering with them, okay, depending on the nature of the business that you run, okay, you may now qualify first for any of the concessions. But there's something we call modified taxation with the law, okay, in Schedule 2. I don't want to use legalese today. But oh no. So when I say that, I catch myself and I move away. Okay. It provides what we call modified taxation. And this modified taxation is to help tax people in the informal sector who, as we understand, they don't make so much, but they are self-employed. Do you get it? So the law has conditions. So you can even pay taxes for as low as 3% on your revenue. Do you get it? And also the informal sector, we have something we call tax stamps, meaning your barber somewhere. Do you understand? He pays about 24 Ghana cedi every quarter. Do you get it? If he has registered his business and we can ascertain that, oh, he's a small business individual running that business for which it falls under this category, he will simply pay this amount of taxes. Do you get it? But one thing I want small businesses to understand is that it's all about, again, we go back to the very basics, the golden rules I spoke about, the registration and the documentation, because we need to put all these files together in order to confer upon you the status of what? An individual one-man business. Do you understand what I mean? And you can now enjoy the modified taxation. One key thing about modified taxation I failed to mention was there's actually a bandwidth in terms of revenue, about 20,000 Ghana cedi in revenue for the whole year. Meaning we are looking to see, and you shouldn't exceed the VAT threshold. Recently, it was actually pushed to about 500,000 Ghana cedis. So you do fall as a small business. You get what I mean? You do fall. And if you know things like this, the only way you can enjoy is to register.
Okay, so Godwin, as we wrapping up, I want you to tell our viewers how they can get their company registered with Ghana Revenue Authority.
Thank you, Dapa. So viewers, it's as simple as it can be, okay? All the registration documents that you got from your RGD, you just simply take all these. You walk to your nearest tax office for convenience. Okay, you walk to your nearest tax office. You present all these documentations to them, all right? You let them know, okay, whether you're already under the tax radar, your GRA tax officer, okay, will now validate and see whether you are in the system, all right? Ask you some few questions. In the case where you have not filed a return, they'll aid you, okay, to file all these returns and now put you under the radar, and they'll confer upon you the status of being registered. Maybe you may have to pay something small. Usually it's 1 cedi. It's called a processing fee. You see, 1 cedi. It's not going to take much. So as simply as it is, that is simply how to register with the GRA.
Okay, great,
Yeah.
great. Thank you so much, Godwin, for
Thank you, Dr.
spending your time with us.
It's my pleasure.
It's been an hour of learning tax and compliance, navigating tax and compliance, and I'm sure that our viewers have taken out a lot of information that they're going to use to run their businesses and become tax compliant. One thing that I'm taking from you is you always say that the law understands us.
Yes.
And the law is very
Generous.
generous. That's the word. The law is very generous. And please, ladies and gentlemen, don't ever forget the 4 golden rules of taxation. Keep records, file those taxes, pay the taxes, and register with GRA. Godwin, thank you very much.
Thank you so
It's been
much
a
for the
pleasure hosting
opportunity.
you. Alrighty. Okay, ladies and gentlemen, thank you for spending or investing your time with us, and see you in the next episode. Bye for now.